Okay, so let's see whether I've missed out some questions. Can you guys hear me okay? Just to make sure that you guys can hear me just fine, and we'll start straight away. Okay, guys, everything all right? Brilliant. Okay, good. So a very good evening, good afternoon to you guys, and I would like to say thank you to everyone for attending today's webinar, and today's the 24th of October 2016. So I know a lot of you, a lot of traders, most of you guys have actually questioned about the condition of the markets. You know, there's a lot of things going on. We are still presidential election. There's still so many things going on. Quite a number of major currency traders or traders who concentrates on the majors. They are wondering what's going on with the Euro USD, especially some of you guys who are onto the crosses are wondering about the majors combined with crosses, whether or not it's a good time for us to trade. Now, all I can say is that we've got various opportunities from now on, so we need to write the trend. But I would like to share with you guys a couple of things that I've noticed in the market as of today, and then we will go over the charts on some patterns. Okay, so you guys can hang on with your questions until the end. I'll come to ask you of your suggestions of which pairs you want me to look at, and then we'll go on to that. Okay, now before anything else, because it's pre-presidential election, the election in the States will be on the 8th of November. Okay, I've got lots of news surrounding the presidential election, but I want to also keep you guys aware of something that's happening in the Eurozone, and it's in particular, you know, has got to do with the banking crisis, you know, Deutsche Bank and things like that. But one of the most important thing is, I think it is on the 4th of December, we've got a referendum in Italy. Okay, so there's a lot of things that are sort of weighing onto the Eurozone negatively, so that is actually giving us a little bit of a bearish sentiment for the Euro at the moment. But let's take a look at one pair at a time. Okay, just the majors first. Now I'm looking at the USD JPY on the 5 minutes chart here. Okay, I would like to just remind you guys that the moving averages that I use are the 3 moving averages here. They are exponential moving averages. Okay, I do apply them in accordance to the parameters that I use, and they are the 50, the 100, and the 200 exponential moving average. And usually what I do is, as I have mentioned to you guys over the seminar in both Africa and also Malaysia, I only use the exponential moving average as a measure of the trend direction. Okay, so let's look at how we actually use that. Now, what I normally do when I go into a chart, now it does not matter whether it's a 5 minutes or 1 hour or the daily chart, but I like looking at trend in a set of 3 time frames. So what does that mean? That means that if I look at the 5 minutes, I'll then compare it to the 15 minutes and then the 30 minutes. If I'm already looking at the 1 hour chart, I'll then compare it with the 4 hour and the day and the daily. Okay, so that's the set of 3 sort of method that I use. So let's say we're going on to the 5 minute chart, which is the shortest term that we could see. The number 1 rule is to zoom out until you cannot zoom out anymore. Zoom out, not zoom in. Okay, because most of the traders, what they'll be looking at is this. Okay, even on a short or a long-term chart, they'll be looking on this. Now, if you're looking at this at the first instance, you're missing out the big picture. So it is highly essential for you to zoom out to the point that you're not able to zoom out anymore. Okay, so here we could apply various things. We are looking at whether or not the current candles, okay, majority of the candles as of price now, are the candles above all 3 lines or below all the 3 moving average lines. Now in this case here we could see that we've got candles above all 3 lines, but what I would like you to also look at is the angle from a bigger picture perspective, the angle of the whole trend, as you can see, from the low here right up to there, and we could see that we've got this particular what do you call that pair USD JPY on a 5-minute chart trending or trading at a sort of 2 o'clock angle. Now that gives me a bit of an idea that that 2 o'clock angle that is trading on may not be giving us signals or sentiments of too strong a bullish trend. It may be still in a bullish trend, but it could mean two ways. One is it may mean that it has not picked up in terms of its trend, or it could be weakening. But we are looking at the 5 minutes chart, and hence the reason we need to compare that with the 15 minutes chart as well. And here, when we go on to the 15 minutes chart, I'll just clear off all these lines here if you guys don't mind. We'll start analyzing that from start. Okay, now here itself we've got this area to look at, and we have got a bit of an angle here, and you could say that it's a little steeper, okay, than the 5 minutes chart. So again, it's towards the 1 o'clock, but it's got a little bit of a steeper angle from the 2 o'clock sort of angle. So that gives us a little bit of an idea. I'm just answering questions here on my Skype. Give me a second. Okay, and here looking at it on the 15-minute chart for the USD JPY, we're looking at a bit of a hint that there are more pickup on the uptrend, because we're looking at a steeper angle. If you compare 5 minutes chart here, okay, you've got it on a 2 o'clock angle, but as you move along to the 15 minutes chart, that angle that you've drawn became steeper. Okay, so that gives us a bit of a hint on the upside sort of sentiment or movement, or the bias to the upside. Okay, and then we go on to the 30 minutes chart. You could see that here itself, we could look at the behavior of candles. We do have candles above the three moving averages, but there is a little bit of a trick here, because when we are looking at the 1 hour chart for the USD JPY, we could see that if you could notice, the movement of the three moving averages are sideways. Now, when we look at the candles above all three lines, that's one way of looking at it. But the other thing as well is to match the movement of the three lines in accordance to the candles. That means these three lines should be moving upwards as well, and they're like what you're looking at here. These three lines are moving sort of a sideways type angle. So this is they don't really match. So there is something that is not really that clear on the 30 minutes chart, even though we see candles trading to the upside above all three lines. So this is where we would need to be quite careful with the movement of candles as well as the three lines. Now, the other thing to look at as well is for us to look onto the price here. Now, this price here on 103.97. Now, 0.97 or 0.98, let's take the last digit after decimal away. So let's just look at 103.98 or 97. Okay, now 98 or 97 is just a few pips away from the 00 psychological number. So what does that mean? That means that we would need to wait till price go above 104.00 in order for us to get a better idea on whether or not prices are favoring the upside for USD JPY. It's a little bit too early at the moment, but we have got the angle of the clock from the 5 minutes, 15 minutes, and now the 30 minutes, giving us that hint that we should not get too excited about buying at this moment of time. Okay, the reason being we're not that clear on the direction of the clock angle of the candles, as well as how the candles are positioned above all three lines, as well as the position, as well as the movement of all these three lines. These three lines here indicates a sideways 3 o'clock type angle. Okay, so that itself is giving us a bit of a hint to just wait and see as of now, and it's not proper timing in terms of price action itself, because price itself, as I've mentioned earlier on, is at 103.9697 or 98. That's just too close to the 00 psychological number at the very top. Okay, so we would need to wait for prices to go above 104.00 at least by 10 pips, like 104.10 at least, to give us a better indication of the pickup of prices to the upside, okay, for the USD JPY. All right, let's just take a look at the 1 hour chart. Okay, let's look at what's going on here. Now, here itself, we've got, you may see it as a steeper move of that angle there, but I'll just clear off all the objects that I've got on the chart. Just give me a second. All right, now this is where I would like to minimize as well, and let's look at it from a bigger perspective. Now the bigger move here, if we were to draw that angle, is from the low here right to the price. As you can see, just that movement itself gives us a bit of a hint that the angle just got a bit steeper compared to the 30 minutes, the 15 minutes, and the 5 minutes. So as we progress into the future, longer term, medium to longer term, I think we could expect more price increment to the upside as opposed to the bias to the downside. Okay, that's just due to the what do you call the angle of that trend that we see. Now the other thing as well is when we look into the if we zoom in a little bit here, we could see that we've got the behavior of candles itself on the 1 hour chart for USD JPY. It's finding support, let's say on this one here, right on the 200 exponential moving average. Now that does give us a hint that because that 200 exponential moving average is quite a heavily weighted moving average, now it found support there, so that gives us again another hint that the biasness would be more to the upside as opposed to the downside. Okay, and hence the reason we would need to wait. Since the price is just too close to the 104.00 area, it's only wise for us to just wait till prices cross that 104.00 right up to the 104.10, and then it gives us a bit of an idea. Now here, if we were to look into that backup technically of how we found support here, you could easily find an ABCD sort of pattern like that. Okay, I'll just draw that out and then we'll evaluate that further. Okay, I think I've got some question coming up. Just give me a second. Now that's how I do the AB equals CD there. Now that's just a estimate or a rough drawing of the ABCD pattern, but we would use the Fibonacci in a bit. Before that, I'll just take a look at the question that I have. Okay, we've got a question here, Mr. Palani. Okay, because today Monday, we need to wait for tomorrow for better view. Could you, Mr. Palani, can you maybe clarify your question there? What do you mean? Do you mean about what I'm talking about now, or is it the particular trade or pair that we are looking at, USD JPY, as of now? I'll just go on and explain that while you, if you can clarify your question, Mr. Palani, okay? Here, for example, okay, got a question back. Give me a second. Right. So your question is about, I know today is Monday, you are absolutely right. Now, this is how we look into it. Hence the reason it is really important for you to be sure as you can about the trend. Okay, and hence the reason I've brought you from the 5 minutes, 15 minutes, 30 minutes, and now we're on the 1 hour chart. So from the 1 hour chart onwards, it is showing me that there are more possibility move to the upside as opposed to a downside because of all the behavior of the candles itself. Okay, as you can see, the behavior of the candles itself it's looking like it found support on very important levels, okay, and that does include the price as well as that moving average that you see. Okay, so if I take that as an A here, B here, and that's C, then I may find a potential going upwards here, around here. Okay, so I'll always mark that there. Now the reason for that is I found a potential ABCD pattern. So that's my AB leg. I've equalized that in terms of the length to the C to D, and that's how I project or find a potential D at this area here. Okay, just give me a second. No problem. So let's take it stage by stage. Okay, we are looking at USD JPY. I'm just clarifying that I find it a clearer trend direction to the upside from the 1 hour itself. We've not gone to the 4 hour or the daily chart as yet. Okay, but we will do so. But at this point of time, we have got a bit of a pattern going on, a potential pattern, only because we've got the C finding a support at a quite strong level here at the 200 moving average. Okay, usually if the C or a support level or resistance level, it hits any one of these three lines, it's a good indication for you. Okay, so this is what we want to pay attention. So if I take that as an A, and then I've got my B here, C here, and then D, then what I'll be doing next is to find your entry point. Now when you want to find, when you want to look for an ideal entry point using geometric sort of philosophy or geometric theory, the best way to do that is just to attach the A right to the D area here, and once you do that, you just look for the cross here, and that cross area is it's what I call the centroid area. Okay, and then what you do is you just mark that area there. Okay, so if I take that away, you'll still have that A, B, C, D, but then you've marked that horizontal line there based on the centroid at 103.86. Okay, now that 103.86 area was an ideal entry area. Okay, that's marked by the center area. That just gives you a hint on an idea of where you could be entering your trade. Okay, so this is where you could ideally enter a long. Okay, but of course you want to apply various other elements to sharpen your entry point. Now that should be based on the psychological level theory as well as the centroid area. Okay, so you want to trade anywhere above that 103.86, and 0.86, for example, it's really close to the 80 psych number or psychological number. So you would like to then adjust that, like let's say 10 pips above the 80 would give you 103.90. So then you would adjust your entry point from 103.86 to 103.90 ideally as a potential entry area, okay, following that principle of psychological numbers. And once you have entered there, then you could see this area here as your first potential TP area at 104.20. Now if you look at the 104.20 area, now again it is right on the dot of a psychological number, which is the 20 psychological number. Okay, we are looking at that after the decimal point. Okay, so 104.20, and you want to focus on that 20. So if we were to apply the principles of psychological numbers and would like to take profit, it would probably be best or ideally to take profit at least 10 pips below that 20. So 104.10 would be your ideal TP area. 103.90 would be your ideal entry area. And if we were to use the risk to reward ratio of 1:1, you would need to measure from your entry point to the take profit point, how many pips would that be, and and equal that to your risk as well. So if I have a potential of, let's say, 20 or 30 pips, let's say it's 30 pips potential take profit, I would equalize that with the potential stop loss to be 30 pips below my entry area as well. So 30 pips on the profit and 30 pips on the stop loss. So that's called the one-to-one risk to reward ratio. Okay. Now the other thing as well is if I have attached the previous downward move down here, I've got a sort of a W-like pattern there. Okay, and that W-like pattern usually signals a potential reversal once it's ended at this D point area. But we have only looked at the potential TP area, just one potential TP area. The other way of looking at it is first to use your Fibonacci by pulling the A to B, like I've covered that with you guys when I met you guys in either Malaysia or Africa. Now, as you can see, if I pull the A to B, let's just brush that up. The most important thing is to look at where C has actually landed. Now, that's not really good, so I'll just go like that. Right, so here I could see that the C is really close to the 50 Fibonacci area. Now, if C has landed at 50, that means that D could actually then it will be possible for the D to reach the 200 what do you call that, extension, Fibonacci extension. That's based on the table that I have sent you guys, and you would need to then equalize or match whatever you see on the C point in order for you to find the D point. So what I do next is I'll pull the B to C for me to look at the 200. So 200 is right up here. So then I would draw the second or next TP option. So you've got two options of your D point. So in other words, your D or the upward move for the USD JPY could reach either here or here. So that area in between the two lines, this is what we call a potential reversal zone. So it would probably be best for you to take profit before prices reach this area here at 104.20. So like I've mentioned earlier on, hence the reason we adjust that 104.20 to 104.10. That means 10 pips before reaching the 20 for you to take profit. Okay, so that's just an ideal short-term type trade that you could take for the USD JPY. Now, the thing that we would need to proceed in looking is to understand the overall trend or the long-term trend for the USD JPY. Okay, now before that, I'll just bring you back to revision. Based on the price trade plan. So what I usually need to do in order for us to be on the right side of the trend is to give us some backup in terms of fundamentals. Now you guys know about zero hedge talking forex, and as you can see here we have got some weakness on the CAD. So here, for example, since we've got weakness on the CAD or the Canadian dollar, that gives us some more room to look at positiveness or the bias to the upside for the USD. Okay, and here we have got, when we scroll down to earlier news, we have seen a couple of news that relates to the dollar, and we could see that here, for example, it did mention about moderation in the morning, and then we've got euro, for example, it's got potential correction. So that gives us some hint about the movement overall in euro. There has been a bit of a correction due to the PMI readings this morning, so that has given some appreciation to the euro, hence the reason we've seen a little bit of a correction for the dollar this morning as well. But now it looks like the dollar has picked up quite well, and this may actually then follow through to the upside for the rest of the week for the dollar. Okay, now here itself, as you can see, we have got prices still quite close to the 0-0 and on the 4-hour chart, we could see again prices for the USD JPY, especially for the dollar, have found support in one of those lines. When you see support right on either one of these lines and occasionally found support in these areas, that's a good indication that you've got stronger participation of buyers that are trying to push the prices upwards. As you can see, the behavior of candles itself now here from this point here right up to this point, you could see that that entire move has been dominated by more bullish candles, and that does also occur here. We've got longer sort of candles or bullish candles here, and they have corrected here right on the dot of the 200 moving average here, sorry, the 100 moving average here, and then here's the 50 moving average, and then finding more support here. So we've got more bias to the upside, and if I was to zoom out here, you could see that that angle there is quite steep. Okay, that steep angle there, it's sort of a 1 o'clock type angle, and that does give us more room to think that an upside bias is at play at the moment for the USD versus the yen. Okay, so here itself on the 4-hour chart, now from the 1 hour right up to the 4 hour, we have got sort of hints that the buyers are pushing the price upwards. Okay, now the other thing you could also do is we'll go back to the 1 hour chart, and you could always take the A from this point here because it corrected right down here, and that's quite close to the 200 moving average here. So if I were to pull from here, making that my A, all the way to B right up here, I would like to then look at the potential C. Now that C has then landed at close to the 61.8% Fibonacci ratio, and that's a good sign because these are one of my favorite ratio is the 61.8 as well as the 78.6. Now I call these two ratios a high probability ratio, and that's really good if you find them sort of landed onto either one of the moving average, and then the C point also coincidentally hits on either one of the Fibonacci ratio 61.8 or the 78.6. So here itself I could easily draw out a pattern, a little bigger pattern compared to the smaller pattern earlier on. The smaller pattern itself is giving us indication on an upside move on an ABCD pattern going upwards. You can always draw another pattern here on a bigger scale, that's A to B. That means your C has corrected downwards. So what you do then is draw out the next leg. That's your B to C leg. Okay, so how do we actually then project that D? Very simple. We'll use the first rule whereby the length of A to B equals C to D. So you'll just double click that, grab that center point there all the way upwards, and then you've got the C projecting it towards D. That gives you a forecast of where D could potentially reach if at all the uptrend for USD JPY persists. Okay, so then I'll carry on drawing that A to B again. Okay, so I've got my A, B, C, and D. So what I'll do next is to mark the first option where the first TP point could possibly be at the 104.56. Okay, now if I've planned that A, B, C, D and projected that there, I could then find the second option. Now let's just look at drawing the pulling the Fibonacci from point A to point B, and here again we confirm that C landed at 61.8. Now based on the table that I have given you, if at all it is 61.8% for C, then D could potentially be 1.618. Okay, so you pull the B to C and you look for 1.618, and that is where your second potential TP could be. So in other words, in summary you've got give me a second, you've got two potential TP points for D. You've got TP1 here and TP2 here. Okay, so usually if you've started along on this trade, then you want to take profit just before prices reaching the 104.56. Now it's safer, or ideally based on the psychological numbers theory, you could look into the 104.40 area, which is 10 pips below 50. So 104.40 to be an ideal TP area. So how do we then look for your ideal entry point? Your ideal entry point is usually once you have got your ABCD pattern, you want to convert that into a geometric pattern by pulling the A right up to the D and looking for that centroid or middle area that has crossed, and that's where you could ideally enter. Now once you find or have found that center point, you want to then adjust whatever you see in terms of price based on psychological numbers. Okay, so here you've got 103.86. 86 is really close to the 80 sec number, as we have done earlier on. So 10 pips above 80 would give you 90. So it would probably be best for us to look at 103.90. Now that has already passed 90, so that is hence the reason we've got more buying pressure. As you can see now on the live market, you could see that we've got the bullish candle building up because we've got prices past the 104.00, as we've just mentioned about a few minutes ago. So this is a good indication, since prices have gone past 104.00, gives us a better chance to look at prices reaching this area here. But again, if you look to the left, you've got resistance area here and all around this area here. Now you want to always look to the left in order for you to look at potential obstacle or resistant area. So it's fair enough to look into prices reaching out or reaching upwards, but you want to also look at potential resistance that does actually exist in this area here. Now this area here itself, coincidentally, it's really close to the 0.20 psychological number, which is 104.20. So once prices does go above the 20 psych number, then you could look at it reaching that area easily. Okay, so this is the momentum that we can actually look into the USD JPY at the moment. Now I would like to, because we're talking about USD JPY and USD in general, we can always go on to gold straight away and then go back to some of the majors, because I've got quite a number of emails today regarding gold's position, what is it actually doing at the moment. Here I would like to share with you on the daily chart for gold. Let me just clear out all these ones here. Okay, now this is what I've shared with you guys on Telegram as well. For those of you who are on Telegram, we've got a bit of a pattern going on. I call it the Z-like pattern. Okay, now this is what's going on for gold. Now we have got a pattern like this here. Okay, this is on a daily chart, by the way, and once you have stretched that all the way to the top, okay, what I foresee potentially happening or could happen is the movement downwards before it goes rebounds up, a rebound upwards. So I see a potential of prices falling to this area before it gives a potential upward move. Okay, so here it's not far away from where the support area was, so we can always look into a potential fall. That does depend on how much corrective move the US dollar would be actually making. Okay, so if we've got more strength on the dollar, then we could see some more falling of prices for gold coming downwards to the 1230 area. So I just want to keep you guys aware of that that zone there, and not be overly excited with the buying of gold straight away, because we have got definitely some opportunity to the upside for gold, but that does depend a lot on the movement of the dollar. So like what I've mentioned to you guys in the seminars, that Gold don't actually go up or down. It does actually depend on the price per unit for the dollar. Okay, so it does depend a lot, and dollar at the moment driven a lot by political as well as geopolitical factors, mainly political at this moment of time due to presidential elections, and throughout history it has always been proving to be on the upside before presidential elections. So this is where we want to be really careful in trading gold as well as the dollar, and look into risk areas. I want you guys, if you could, to focus more on risk areas. And here, for example, once we look into a Z-like pattern, we can also measure the 50% Fibonacci ratio, meaning that we've got the first TP area of where prices could fall to based on this, what you call that, AB length equals CD. This is how we built or form this ABCD pattern, but the other option is for you to pull B to C and look for the 50%, okay, 50% Fibonacci ratio, and that's just around here. Okay, now these are the two options or two TP area of where prices for gold could fall to. So this is where the risk lies. The risk lies in the fact that prices hasn't or have not reached either one of these lines. So this gives us a bit of a risk by saying that if at all we've got appreciation of the dollar, we can then see gold coming back downwards to either 1230 to the 1210 area. So this is the risk for gold's action, okay, in terms of price action, because prices have not reached these levels, so there's still room for it to come back down and reach this level before it makes a bounce up. So usually based on the Z-like pattern, once it ended at the D area, then you could see it moving upwards. But again, this does also give us the hint of more challenges ahead once it comes down and tries to bounce upwards. Then you've got all these three lines for prices to pierce through. Okay, so it's best for you guys to also look at not only price action, psychological numbers, but these three lines, exponential moving averages, as your potential obstacles. Once it does pierce through and go above all three lines, then we could say that the coast is clear for the prices to go further up. At this stage, it hasn't reached that stage as yet for gold. Okay, so still too early to feel overly confident on prices of gold to be appreciating or time to go up. It's probably not just yet, but it's quite close, I would guess. Okay, so this is what's going on with the with gold. Now we'll go back to the Euro USD at the moment. If you guys have got no questions, have you guys got any questions at all at this stage for gold, perhaps, before I go back onto the currencies? Any questions at all regarding gold for those of you guys who have asked me a lot on gold? As you can see on the 4-hour chart itself, we've got a lot of uncertainty going on. By saying that, I am referring to how the candles are moving. They are in between the lines. If you've got candles moving in between any of these lines, they are not way under or way above all three lines, this hints us uncertainty in the market. Okay, when the market is in doubt, you as a trader should be staying out. So that's the message that you would get once you see candles trending or trading in between the lines. Okay, so this is not really that clear in terms of trend as well on the four hourly chart. Now if I've moved to the 1-hour chart, you could see that we have got candles piercing through, but you've got all three lines, as I've mentioned in my seminar as well, or previously in many webinars. When you see the behavior of the three lines, when they're all entangled or they're too close to one another and they're not giving you a clear rise upwards or downwards traveling freely, then they are giving us some uncertainty as well, a message or hint of uncertainty, because here itself you could see that all three lines are traveling horizontally, and this is called a 3 o'clock angle, and this as well is giving us some hint that there's some things to watch out for. It's not really clear in terms of trend for the gold as of now, okay, based on the 1 hour chart. As we travel to shorter time frames, once you look into that, you could see that the shorter time frame, we still have got some uncertainty here, okay, despite the fact that the candles are traveling above all three lines, but these two has to match, okay. If you've got candles above all three lines and you've got the three lines, the three exponential moving averages are also moving in favor or matching with the movement of the candles, let's say upwards or downwards, then you've got a better hint that the trend is clear or strengthening. Okay, so this is what's key for us to look into as well when we're comparing trends, okay, or when we're identifying the trend. Now here, for example, this is what I would like to look at. Gives us the hint of a clear sort of trend is when you have got the three lines traveling either upwards or downwards as such. We've got the three lines, not touching not touching each other at all, and they're actually quite far apart, and they're giving you hints that the trend is strong. Okay, this is how it gives us a hint that the trend as of now on the 5-minute chart could be strong. But as you could see, we cannot rely on just one time frame, and hence the reason it's best for us to cluster the time frames in a set of 3. So it's best for you to, if at all you're choosing a 5-minute chart, to compare that with the 15 minutes and then the 30 minutes, or the 30 minutes, 1 hour, and 4 hour, or any mixture of 3 time frames, and that gives you a better idea on what's going on. Okay, so this is it. With gold, it's best for you to look into dollar movement as well. Okay, now any questions at all, guys? Any questions on pairs that you wish to look at, or questions about trade ideas that you guys have spotted and not sure about the patterns or the geometric pattern itself? Anything at all? I'm now waiting for your questions. We've gone through gold and USD JPY. Now we're looking into Euro USD on the 1 hour chart. Okay. From checking or from looking at Talking Forex, 0H Talking Forex as well, as of this morning, I have only seen loads of hints to the downside for the euro, especially the eurozone. So this is where we want to confirm and look into more hints based on charts as well, whether or not we've got the ABCD, bearish ABCD, hinting us more downward movement at all. Okay, so here itself we have got Euro USD on the 1 hour chart. As you can see, if I zoom out entirely, we could see the clock angle itself here on the Euro USD 1 hour chart, and we could also look into the the price. Now price itself is at 1.0885. Now we could see that comes into quite a nice 5 o'clock type angle for the Euro USD, okay, 1 hour chart. All right, from a bigger perspective or bigger picture perspective, if I were to drag that all the way here, okay, so yes, we've got some angle there, perhaps like a 4 o'clock-ish angle, okay. It is pointing down. We've got the 3 lines pointing downwards. The angle of it as well, it's quite steep, showing us an angle to the downside, and then we've got some correction of candles not piercing through the 3 lines at all, either caught up at the 50 or the 100 or the 200 like this one here, and then now we've got prices here as well well, being caught up here at the 50 moving average. So that's just giving us hint based on the 1 hour chart, more strength to the downside. And you could also look into more dominance of bearish candles here. I think I've got some question here. Let me just check. Hi there, Robla. CAD Okay, so CAD we've got Euro JPY, AUD, USD. Let's look at those. Right after the Euro USD that we're looking at, we'll just go on to these three pairs. Okay, so let's look into this. We've got, let's say, CAD, okay, JPY, Euro, JPY, and AUD, USD. Brilliant. Let's look at these ones. I'm just writing them all down so I don't forget. Okay. Let's just look at that. Now we'll just continue on the Euro USD first. Okay, now here itself, as you can see, still more dominance, but what would give us a bit of a bigger hint that the downside pressure is to the downside is once we see prices going under the 80 side number. Okay, so let's take the price for Euro USD at 1.08 84, let's say 85. Okay, so that 85 there is just closest to the 80 side number, correct? So we need to see prices go at least 10 pips under the 80, which is 70. So in other words, it's probably best for you to wait till prices travel lower than the 80 right to the 70, 1.0870 area, and then it would give us a better hint to the downside. Okay, now here if I were to pull that all the way from that wick there all the way down here, okay, we could then see whether or not we could regard this movement as a potential ABCD. Now how do I do that? I first measure where does the C. Now the C in this case, for me personally, I would like the C to be at the minimum of 38.2. Here the C corrected potentially at the 23.6. So even though we've got more, room to believe that it's coming down because of what we're looking at the moment, it's probably best for us to wait till we could find prices traveling under the 80 psychological number first before we make any further decision. Okay, because here the correction didn't meet my minimum criteria of 38.2. So the C point for an ABCD movement would be best to be a minimum of 38.2%. Okay, that's usually how I do it, and I usually don't use the 23.6 Fibonacci ratio at all. Okay, so let's just get that away, and we've got a sort of a hint to the downside based on the 1 hour chart. Let's just proceed to the 4 hour chart. Now here, the 4 hour chart itself, it's got a very nice angle. I like measuring the angle from here as well as the very top. Bigger picture and small picture or small perspective, both are giving us a hint to the downside because we've got candles traveling quite far under all three lines, which is a hint to the downside clearly, and then we've got all these three lines quite far apart pointing downwards, and this is another very good hint that we've got more dominance by the bears or the sellers as opposed to the buyers. Okay, now let's proceed to the daily chart. Again, this is giving us even more hint, and we've got prices traveling even further away from the three lines, under the three lines, and that is giving us biasness to the downside. We've got these three lines splitting open as well, pointing downwards, and again good how to call that, view to the downside, good hint to the downside, and this is what we're looking at for the euro versus the dollar, more bias to the downside. If we were to look at what's happening as of now in terms of the shortest term, we can then look at uncertainty in the shortest term, and that does mirror or coincide with price action because the price has not gone, we have seen 1 hour, 4 hour and daily hinting us to the downside, so that's good in terms of trend. But in terms of prices, we would need to wait till prices go under 1.0870, and then we could then plan further and look for ABCD patterns to the downside. Okay, so that's Euro USD for you guys. All right, now let's proceed on to the CAD JPY, perhaps Euro JPY, AUD USD. So let's take one of the majors first. Let's go on to AUD USD because we have seen lots of movement by the Australian dollar. As of this morning, if you guys have checked your top 10 on Action Forex, you've seen that you've got a lot of appreciation to the upside with the Australian dollar, especially versus the euro or versus the dollar, and we see lots of appreciation to the upside by the Australian dollar. So let's look at the chart for AUD USD first to see on whether or not we still look into, we still could see upside movement or uptrend for the AUD USD. Okay, so let's just change that. Give me a second. AUD USD, there you go. All right. Okay, now we're looking at the, let's look at the 1 hour first. Okay, let's start off with the 1 hour. Let's look at what's going on. Let's look at trend. Okay, now trend itself, as you can see, we've got at a glance, we're looking at the candles. Candles are, majority of the candles as of now under all three lines. But I see that the three lines are sort of entangled and they're giving us a bit of an uncertainty. Okay, so we know that candles are at least moving quite well downwards. We've got that nice angle here to the downside as well. Okay, now this major movement that we can see here, it is giving us hint to the downside as of now. But let us look into price action as well as the behavior of candle as well. Now here with the three lines itself is giving us a bit of a hint that we need to be aware and not be overexcited with any selling for the AUD USD. Okay, the reason is because we've got entanglement of the three lines, even though we have got candles under three lines, but the three lines is giving us a bit of uncertainty. Okay, the three lines is pointing towards 3 o'clock and giving us that hint to, to be aware that this may or may not be the trend at the moment. Okay, so here we've got some questions here. Okay, no problem, Suhail. Have a good evening. That's not a problem. Thank you very much, though. Okay, have a good evening. Bye-bye. So here to continue further, we do see at the moment candles, to the downside, and we've got dominance by bearish candles at the moment. Okay, so here is where we need to be careful. Let's continue and proceed to understanding the trend at first. Now with AUD USD now 4-hourly chart, again we have got uncertainty. We've got the three lines, but not only that, we've got candles still in between. Now let's look to the right for the prices. Prices are at 0.7610. Now this is why we are having a bit of a confusion on the AUD USD in terms of now. Perhaps earlier on we had loads of buying opportunities and a lot of things have actually gone on earlier today with the AUD, lots of movement for the AUD. But here I would like to hint you that you're looking at the price at 0.7611, let's say 11 or 10. Now the last two digits of the price, we're in the middle or in between two psychological numbers. Now, two psychological numbers. Right at the very, right on top to the upside, we've got 7620. Right below, we have got 7600. So let us just wait till prices have actually pierced through at least 10 pips under the 00 or above the 20. Then we would get a better hint on what exactly is going on. Okay, at this stage, it's probably too risky to decide on an order because we are in doubt. The market's in doubt, so we need to stay out. We need to watch and see. We need to look at what candles are doing, whether or not they pierce through any one of the psychological numbers first. Okay, so let's look at questions. Okay, the three lines are the moving averages, Adnan. They are the exponential moving averages. They are the 50, the 100, and the 200. I only use these lines as a trend indicator, meaning that I would like to look at the behavior of these three lines, how they travel. And are they under the three lines? The candles are they traveling under the tree lines or above all tree lines, whether they're entangled or touching each other, or they're giving a bit of a clear hint to be far apart from each other. And like here we've got the three lines, they're traveling sideways at 3 o'clock sort of angle, and that just gives us a bit of a hint that we need to just wait further, because even the tree lines are not traveling upwards or downwards, at an angle. Okay, they're traveling sideways, so we would need to still wait. Now we've got this candle for AUD USD on the 4-hour chart, strengthening to the downside, but we would need prices to go through 7600 to the downside. That means once it goes under 7600, at least by 10 pips, we can then give us a bit of a hint that the bears are dominating. So let's just wait a little bit more, and we would be able to get a better picture on the trend direction. Now that's for the 4-hour chart. Now we go on to the daily chart for the AUD USD, and again we could see that it found support in the longer term. We've got lots of support here. They're all got concentrated at either one of the three lines, and that gives us a hint that the biasness is more to the upside on the daily chart as opposed to the downside, because you would need long candles, or strong sort of bearish candle to pierce through all these three lines and go under them to give us a hint to the downside. Okay, for the AUD USD. So that's basically for the AUD USD. Any questions on that one here? I think we've got some questions coming through. Okay, we've got a question from Alvin. Alvin says, hi, Kenny, is it better to see from small time frame to long time frame, or vice versa? Okay, that's a very good question. Now, that is entirely up to you. If you practice a set of 3, you could move on to a smaller set of 3 time frames or bigger. But this is the thing. You would need to trade or choose time frames in accordance to your equity, your balance. It's really important. Okay, so if you've got an equity to start off with, let's say, just an example, 500 or less, is probably best for you to concentrate or focus on 1 hourly time frame and below, not 1 hourly time frame and above. Okay, so the smaller that you start off with your equity, the better for you to go on to smaller time frames. All right, so it does depend on your equity. Hope that's clear for you, Alvin. Okay, so let's move on. We have got, let's see, we've got the AUD USD covered at the moment, so that's what's my take on the AUD USD. We've got the next ones, we've got 2 other pairs to cover based on your questions there, Adorabla. So we've got CAD JPY and Euro JPY. So let's look at whether I've got Euro JPY here. Not there. So let's go on to CAD JPY first across. Okay, let's just go into that. It's just right there. Okay. Now let's start off with the 1 hour chart for CAD JPY. Okay, let's start off with the trend direction. I'll just zoom out till I could not zoom out anymore. Now here itself, we've got the biggest movement that you could look at is this uptrend here, the start of an uptrend from this bottom or low right up there. So we'll just draw a sort of line right there. Okay, right. Now that angle itself is sort of a 2 o'clock type angle for the uptrend. So that gives us a hint that the upward sort of momentum may not be that strong. But let's concentrate and focus on the smaller move that we could see here. Let's see here, because we've got, we could easily notice how prices have actually traveled downwards, came under all 3 lines, tried to correct itself here. We've got these 3 candles. We've got candles. I've got these 3 lines here behaving as such. We have also a price to look at 78.04. Now that downward move here itself has got an angle. Okay, you could say it's like sort of 4 o'clock-ish towards 5 o'clock-ish. So we have got a sort of strengthening type angle perhaps, okay? But here I would like to share with you with what I could see at a glance. I could see that there's maybe a possibility of a Z-like pattern here. Okay, now that gives me a bit of an indication that the downward sort of momentum would come down to this, potentially this area here. Okay, now this is where as you can see, coincidentally, we have got prices bouncing off from this area. So this Z-like pattern does indicate a potential movement downwards here. That's your D point. So you've got A, B, and then you've got C, and then D. So that downward move here, it is bouncing upwards. So yes, there may be a bit of a potential for a bounce to go upwards since it has reached that D point there. So we have got a bit of a potential to move at least to the 50+% in terms of an upward move. But let's also look at the other option of the D point, which is 50% of B to C. So let's look at 50%. So we do have that. Now the question is whether or not it has finally completed that area there. So here we would need to, if at all, we would like to look into whether or not prices is on its way up and have actually crossed the psychological numbers. We would need prices to go above, at least above 10 or above 20, meaning 78.10 or 78.20. So it would need to reach at least 78.10 to give us a bit of a bullish momentum, but better still if it does go above 78.20, right up to 78.30, then we've got a better indication of a bullish momentum. Okay, that's for the CAD JPY. So this is a Z-like pattern. That's your point D here. So it's looking like point D is traveling towards point E at the moment, upwards. Okay, so if we go onto the 4-hour chart, you can see that Z-like pattern is quite clear. We have got a bit of a possibility to look into price appreciating upwards. So hence the reason we want to just wait and look into prices above the 00, above the 20 or above the 00. Okay, so there we go. Now on the daily chart, we're looking into a bit of an uncertainty, not really a clear uncertainty, it's just that it has come out of that 3 lines area there, but the biasness, it's mainly to the downside on the longer term. The reason being it has been challenged by that has been a resistant area there right on the dot of the 200 moving average, okay, 100 moving average, so that now it's giving us as you can see more dominance by bearish candles, so that is giving us more hints to the downside on the daily chart. Okay, so that's basically on the CAD JPY. Let's move on to the next one, Euro JPY. Okay, so we'll move on to the Euro JPY. Before I move on, any questions at all on the CAD JPY? Let's see. Okay, Kunendran has got a question here. I would like to know what are the fundamental information that relates to CAD JPY forecast. Now, when we talk about fundamental, it could be geopolitics, it could be news, it could be anything that you don't see onto the chart, but it's mainly on the news, you know, the news side of things. It could be economic related news, political as well. Now, with CAD/JPY, you would be looking into price of oil as well because it relates to the CAD. You would need to look into the economy in Canada, of course, its interest rate decisions and what sort of sentiment is CAD, what do you call that, will be impacted on, because CAD as well, because it's Canada, we've got a bubble going on in Canada, we've got a property bubble as well that is inflating price quite a bit. So you would like to then compare whether or not that inflation driving price up for the Canadian dollar, has it been stronger compared to the JPY? Now here, if we've gone on to what I've mentioned earlier on the what do you call that, CAD news based on Talking Forex, let's say, just an example, you could see that at about 1 something GMT time earlier today, they've hinted us in terms of news on CAD weakness. And then if you read further, you could see that it hinted us on a dovish Bank of Canada and a modest slip in oil prices combine to underpin this spot rate. So we then know that we've got the Bank of Canada being dovish, okay, dovish meaning bearish, all right, and then we've got prices of oil as well hinting to the downside. So these two factors by the banks as well, the price of oil, have then weakened CAD as of today, earlier today. So that was the hint given, and hence the reason I would emphasize on more focus onto news that would revolve around Canada or the Canadian dollar, as well as the price of oil, because it does then impact the price of, the Canadian dollar's movement or its price. Here itself, at the last sentence here, it talked about AUD versus the Canadian dollar, as well as the NZD versus the Canadian dollar. They have turned higher, okay? So that does tell us that AUD, both AUD and NZD has appreciated in price compared to the CAD, giving you more hint that it is pushing the Canadian dollar downwards towards weakness. Okay, so that is what's been going on with the Canadian dollar. So here itself, Canada, as you see it onto the chart, we have got various factors giving us a bit of a view to the downside as well. If we look into the charts, and you can see that it's found resistant here, and you've got more dominance by bearish candle. What we would need to do to find CAD JPY trading lower is to wait till prices go under 78.00. So this is 78.05. So you want to look at what prices would do once it goes under 78.00. Does it actually continue going lower under 78.00? If it does, then we can then look into more hints by the bears or the sellers to give us more selling opportunity as opposed to buying opportunity for the CAD JPY. Okay, hope that's clear, Kunendran, as well for Canada, for the Canadian dollar. All right, now last but not least is the Euro JPY. Okay, so we'll look into that as the last pair that we'll be looking at today, and let's just look into Euro JPY, Euro JPY. Right, there you go. All right. Now, a lot of special thing this week, of course, before I end it, after I've, gone over Euro JPY, is just to focus on pairs that would impact the Eurozone, Brexit, as well as the dollar. Now, these are the big three that we would like to focus on. The big three economy as well that we would like to focus on is the US, not only economy, but anything that would impact the movement of its financial markets, including politics as well. Now we've got the dollar, we've got the US market, the Eurozone market, as well as the British market, or the pound sterling. So these three big threes are for us to look at for this entire week, giving us loads of opportunities. So hence the reason we would like to marry that up with what we see on the economic calendar for this week, as well as big news that would pop up by the hour. So hence the reason it's best for us to monitor the zero hedge talking forex as well, and keep yourself informed on Telegram and ask loads of questions as well on these big three. So these big three are the ones that is going to be correlated to the other pairs to give us a lot of trading opportunities for this whole week. Okay, perhaps for the next couple of weeks too. All right, so let's look into the Euro JPY on the 1 hour chart first. Let's say we go onto the 1 hour chart. We could see that there's a bit of an uncertainty going on just at a glance as we look into the 1 hour chart for the Euro JPY. We could see that the prices here trading at 113.42 area or 43 has actually pierced through the 50 moving average and heading towards the 200 moving average. Sorry, the 50 heading towards the 100 moving average, and prices or candles are in between the lines. They're not way above all three lines or way under it, so that's not a good sign. It's giving us a bit of an uncertainty. Now that also coincides with prices being very close to the psychological number of 50, because it's 113.43. 43 or 44 is just 6 to 7 pips away from the 50 psychological number. So if at all prices were to find resistance at that area of 50, then you're looking at more chances for it to find its way downwards to the downside. Okay, but here it is just a bit too early for us to decide straight away, but we have got two obstacles, the 100 moving average and the 200. For prices to pierce through all three lines may be a bit more challenging than not having these lines in the way, okay, of it traveling. So hence the reason we would need to do a bit of a waiting, a bit of a, looking at prices to be under all three lines or have pierced through all three lines in order for us to give us a clear direction of its trend. Now if I go on to the 4 hour chart, we have got the medium-term chart of 4 hour chart giving us a bit more hint to the downside as well, because we have got prices trading or trending under the three lines. Now here itself we have got prices finding resistance again at the one of the three lines moving averages, and then here we've got more resistance here at the lines as well. So that's giving us more dominance to the downside based on the 4 hour chart, and here we've got a bit of a correction going on the upside, and we've got 113.43 at the moment. So we would need prices to be visiting the 113.40 area and below. That means keeping its head below the 50 the 50 psychological number to give us more hints to the downside pressure for the euro versus the JPY. So in this sense, it's giving us hints that the JPY is stronger than the euro. So what you would need to be doing is to look into more news that are giving us hints of JPY or the yen strength. Okay, so we want to look into bond buying, want to look into news that is talking about what Koruda is saying, whether or not it's got more hope, or whether or not they're out of control, they cannot actually control the inflation, whether they've got more money being pumped in to create this inflation. So these are the hints that we would like to look at from the news perspective in order for us to match that up with what we see onto the chart. Okay, so this is on the 4 hour chart. We've got a daily chart now. Now the daily chart itself, once we zoom out, you could see that the angle, the trending angle is more towards the 5 o'clock-ish. Okay, it's past the 4 o'clock-ish, so that gives us more hints to the downside for Euro JPY on the long term or daily chart. Okay, as we zoom in, you could potentially see some ABCD type pattern going on, but this one here, this ABC shouldn't be taken as an ABCD from this point, because A should always be higher. Okay, so if you were to drag that one there all the way down here, making that your A point, B point here, and looking at this area here as your 61.8, then you could project further down on an ABCD. So that's a potential area there. So we could see that the potentially be looking into this area here to reach, okay, as 110.09 area. Now how did I do that? Is by getting your A here and just strengthening that as what you see there, AB, okay, and you drag that all the way to CD. That's how we got that point there, okay. That's just a potential. Of course, you would need lots of backup on that to give us more hint to the fall of the euro. Okay. Now, if we go on to the 5 minutes chart and look at what's going on as of now, we do see a bit of a correction going on. So there's a bit of an opposite sort of move, okay, here. So overall, from 1 hour to the daily chart, we're looking at more dominance of bears or sellers for the euro versus JPY. But for the shorter term, we are looking at a potential correction at the moment, okay. So this is where we could easily draw an A, B, C as well and project it on how far it could go to the D, but that's not the overall trend. The overall trend for the euro JPY is still pointing to the downside, especially for longer term. That here we could see that the 5 minutes, let's look into the 15 minutes as well. Shorter term, oops, it's just giving us some corrective move here, okay. So this may be a sort of ABCD that we could potentially do. Now if you find an A to B right there, okay, and then we just go there, you could see that prices have actually crossed it, that area there. So that's giving us more hint to the upside on shorter term. So there's a bit more room or movement to the upside on the shorter term for the euro JPY, but then excuse me, overall we're looking at more room to the downside, or trend wise is more to the downside for the euro versus JPY, okay. But we would need some news to back us up on that. Alright guys, I think that's all I've got for you guys, but before anything else, if you guys could let me know if you got any questions, anything to ask based on what we've just covered. You guys are okay? Anything at all? Any questions as of now? Yes, we've got questions. Now, Henny, how are you doing, Henny? Good to hear from you. Good to see you in my webinar. Okay. Thank you, Henny. Good. You've got some questions. Geometric webinars. Yes. Will it also be available on the blog? Yes, you will. You will have this on the blog in due course. Definitely. Yes, I think very soon. I just need to have this. What do you call that? Converted the file, and then get my marketing team to help me have that onto the blog. Definitely, no problem. Okay. Have you, Henny? Have you watched all the 4 geometric sessions? I think that was the certification course. I hope that made sense. I think it's clearer once you've watched them all. I wonder. Okay. All right. So I think that's all I've got for you guys. And happy to hear from you guys via email. If you guys are not yet, you say, Henny. Okay, that's fine. Not a problem. No problem. Any questions on these videos, Henny, as well? Feel free. You can email me at kenny@orbex.com. We'll get in touch, keep in touch. You can ask your questions openly as well on the Telegram, on Telegram, so everyone could also, take a piece of that action to learn from there, learn from you guys, because I myself learn from you guys. So yes, keep the questions coming, keep sharing, and sharing is caring, of course. So let's do that on Telegram as well. Now, for those who would like to join again, that would be a Wednesday session. If you guys have got a live account, these are for live account holders only. On Wednesday, it's the same time. We'll go into more not only trade ideas, but a bit of a troubleshooting and looking into your current trades with us at Orbex. Okay, so yes, I would like to say a big thank you to you guys for attending my webinar this evening, and hope to see you guys soon for the next sessions and webinar. And for any questions, feel free to email me or to ask directly onto Telegram. Okay, guys, thank you again once more. Have a very good evening and see you soon. Bye-bye.